The introduction of the 15 electronic money transfer levy EMTL on fintech transactions has sparked significant controversy and concern among Nigerians. This new charge, effective from September 9, 2024, will see fintech companies deducting a 15 naira EMTL, that's electronic money transfer levy, from every inflow of 10,000 naira and above. This mandatory fee, in line with Federal Inland Revenue Service (FIRS) directives, marks an extension of the previously bank-only EMTL to all fintech transactions. While fintech firms clarify that the fee is directed entirely to the federal government, there is growing concern among economists that this move could discourage digital transactions and stifle innovation in the fintech sector. Well, joining me for more on this, I have with me Muktar Mohammed, the CEO, Asher Investments Ltd. Thank you, Muktar, for joining me today.
Thank you for having me.
You know, in all of this, I mean, it's interesting how that I've always had this levy, tax, conversations with you. Now, one thing that sort of speaks loudly in all the government action so far is the need to increase revenue. I mean, we see the government exploring various options, whether it's a levy, tax, or fees. How ingenious do you think these measures are, really?
No, they're not ingenious measures. I mean, they are measures that they just come out of it and they just come up and just tell us this is what they want to do. These are not ingenious measures. Somebody said you think out of the box, but these days we are thinking in the cloud. The government is not even thinking out of the box, the purpose of thinking in the cloud. These are just means of just getting revenue. I keep saying that levies on businesses are not the best. In a situation whereby the tax reform committee is working at reducing levies on the informal sector, which these fintech companies practically one of those sectors. And here you are again saying those levies comes from, and we're saying we want to reduce levies, want to make sure that we just pay taxes. And today you are saying this, tomorrow. So it just shows the lack of synergy in terms of policy direction. The FIRS is going 1A, looking at revenue. I mean, they are so excited that they've increased revenue. In the first quarter, they've had about 1.5 trillion or 1.5 billion compared to last year, and we're excited that the Minister for Finance also is telling us that revenue to the tier government will share about 1.9 trillion. But we are not seeing this effect on the economy. And when you think about levies in this kind of a sector that is one of the most patronized sectors, especially when you're talking about the unbank. And that has been the trademark of CBN, trying to get more of the unbank into the banking space. I don't think they think really deep before coming out with policies.
Well, can we say entirely that the fintech sort of only serves the informal sector? Because, I mean, if I look at what you're saying, now you're saying that we have the tax reform committee that's working to ensure that, we don't stifle the informal sector, and we probably add some percentage to some other things, while some other places that affect everybody, we probably totally remove tax or, stuff like that. I mean, we cannot categorically say that fintech only serves the informal sector, so.
Well, they serve the formal sector too, but if you go, fintech is more or less that serve the informal sector. They are more in the rural area, they are more in the market, they are more with students, they are more with low-end earners because of this reduction in fee, because most of them don't want to use the banking space because of the high cost in terms of fee transactions. So they use these fintech companies. And now you are saying you are going to relieve them of those things that make it attractive for the rural areas, for the student, for the farmers, for the market women to patronize them. So what you've seen is that you have increased the market women price in terms of price of their goods, in terms of the farmer price of their goods. Then you have reduced the income that comes to student also by 15 naira. You have hiked the price in the terms that comes to farmers or market women by 15 naira. That's what it just means. So that's what I mean, that you are trying to create more challenge for the Nigerians. Because if you go to the market, if you go to ETL, even if you go to some of major eateries in Nigeria, most of them normally deals with some of these fintech companies because of the ease and the quick nature of their transactions. So what you see now, you might just go into a eatery and you want to do a transaction, and what they are telling you now is, look, you have to pay 15 naira extra for this transaction.
I quite understand that. But while traditional banks have been subject to the EMTL for some time, do you think the government could have implemented a lower levy for fintech companies given their operational differences and often smaller scale, compared to traditional banks? Would that have worked for you?
That might have worked again, but I think again, what we should do as a government is try to support that sector. That sector is largely driven by the youths. I mean, and you see youth unemployment going high by the day. It's a sector that is driving most of those innovations, like you said. It's going to stifle some of these innovations of the Nigerian youth that are using that as a means of even doing self-employment and trying to bring in more innovation in that space. So I think that space should have just been encouraged rather than now charging levies on them. And yes, they make profit by and by, but like you said, they pay personal income taxes. There are other they pay value added taxes also on them. So that should just have been, the government should have just been there, because this current electronic charges, that is why a lot of people went to the fintech company, because they don't understand why their banks are collecting some of these charges from them. So now they go to the fintech company. Now you are not telling them to go back again to the bank. So very soon you are going to see a lot of Nigerians, rather than bank with them, do transaction with this fintech company, will now begin to go back to having cash and keep their cash in their houses. And this is what we don't want, because again, the CBN knows the cost of cash circulation and the cost of maintaining cash in the system is higher than this 50 naira that they are charging on these fintech companies.
Well, paying specific attention to fintechs, would you say it is currently encumbered with, fees and levies? Are they dealing with a high tax environment? Would you say they are?
No, I don't think they are dealing with so much of a high tax environment. That's the truth. They are not dealing with so much of a tax environment. We mustn't say what is not true. But what has made it attractive is the levy. The levy itself, that it was a transaction that you do up to 20,000. They price themselves with that. You do a transaction without paying levy. That's why a lot of Nigerians choose that fintech, especially, like I said, the student, the market women, the small.
Okay, let me come here. So how do we keep the fintechs more competitive? How do we ensure they maintain their competitive edge? Because that's actually very important, looking at who they serve.
Infrastructure. You see, if government say we are taking these levies to build infrastructure, especially in the area of cyber security, that should have been nice. And then you see that you're investing it in something. You are taking it from that space and investing it into that space to create more robust and security of that space. And you attract more fintech companies into Nigeria. Because most of the large player fintech companies want to come to Nigeria, but they are looking at the cyber security aspect of it. So we are not even looking at that. What we are saying is that this money will now go back to the three tiers of government. And when you go back to the 3 tiers of government, look, it has always been one thing. We are using it for education. We are using it for health. At the end of the day, we are not seeing the benefit of all these things. So I think if you are trying to take it from them, then you should be using it to build a very strong cybersecurity backbone that will help them grow. That will make it very difficult for fraudsters to hack into some of these fintech companies, like what we have seen we've heard in the news, where some of them have lost a lot of money because of cybersecurity.
Well, let's look at the 2023 fiscal account report from the Accountant General of the Federation. The government generated 5.9 trillion naira in revenue, but spent 19.9 trillion naira, and that of course resulted in a staggering deficit of 225%. Now, essentially, the government is spending nearly 3 times what it earns. 2024 sort of looks better, considering they announced 9.1 trillion now for Q1. Of course, that was done by the Minister of Finance, Wale Edu. Now, what other option does the government have to generate the much needed income? Because when you look at this balance coming from 2023, that doesn't look good. Over 225% of what is being earned is being spent. So the government definitely needs to get money somehow, somewhere.
Well, but Richard, the government needs to get money somewhere. I agree with that. I think I'm not so much in support of borrowing. But again, getting money somewhere, somehow, that by taxing more of the already tax is not the injury. The government needs to begin to think innovatively. Yeah, they just did one coming up with the diaspora dollar-dominated, local dollar-dominated bond, and you see that it was oversubscribed. They said they're having about $900 million from that side, which is fantastic. I keep saying that at a point, Nigeria in the diaspora remittance to this country was higher than the price we earn even in crude oil. So I still think that's the space they also would have want to look at again to see how they can come up with product. Because if internally for people that are not even earning so much of efforts can generate this kind of amount, you can wonder if you just wonder if you come up with a product, how much of Nigeria in the diaspora you will be able to attract for capital infrastructure, for business, for infrastructural development, and also for social development, the area of health and education. So for me, I think instead of waiting forever for foreign direct investors to come or for portfolio investors to come, we should begin to think of a product that could attract more of Nigerians in the diaspora. And I think we have a very good way with the Diaspora Commission, which is also something that we can really look at.
Interesting. Now, I know you've mentioned this but I want you to emphatically tell us how this is going to affect that space, the fintech space, really.
For one, I think the what we'll see there, we'll see a lot of people leaving that space. And again, that also will now come in the area of job creation. You could see a lot of youths that are working in that space also lose their job, because when you don't have a lot of customers, when your overhead cost is higher than your profit, then you begin to think of how to reduce your overhead costs. And I always say in business, when you're thinking of reducing your overhead costs, the first place you look at your employment, those that you're employed. So you want to reduce their costs in terms of salaries and allowance. And so that's a bigger picture that will play out. Then, like I said, the gain that we've gained in the area of cashless transaction with the CBN, also looking that by 2025 it will go high. We might end up losing that also.
Right, thank you so much for your thoughts on the show today. We do appreciate your time. Muktar Mohammed, CEO, Asher Investments Ltd.
Thank you for having me.